Recording. All attendees are in listen-only mode.
Well, hello and welcome to the November 2013 WindoTrader guest webinar, Perfection is Killing Your Trading by Matt Davio. Matt is the founder of Market Profile Trading Academy and can be reached at marketprofiletradingacademy.com. Matt's traded futures and commodities, equities, and equity options since the early 1990s. And during that period of time, he has, as an active trader, also worked with Peak Six Investments and Parallax Fund before starting his own fund. In 2000, Matt relocated to Bend, Oregon. And there he spends more time with his family, who are all active in outdoor sports ranging from downhill skiing to soccer and football to lacrosse. And when Matt's not trading or mentoring, you'll find him outdoors enjoying all of the Eastern Oregon benefits. Today's presentation will be on perfection, where Matt will discuss how time frame selection helps us overcome perfection, how trading less helps us earn more, and how...
All right, let me know when you can see the screen on your end, Terry. Thank you very much for the kind introduction. Should be able to see it okay now. So thanks again, Terry. You and I have had the pleasure to meet each other face to face one time, and I know we're both out here on the West Coast, and you actually came up to Portland. I had come north from Central Oregon up to Portland a couple weeks ago, or actually it was about a month ago now, 6 weeks, for a lacrosse tryout, and it was great to meet you and Meryl, and we've been talking, and I've been utilizing your product now for almost a year, and I've become a huge fan of WindoTrader. It is, for me, as a long-time trader of using many tools, your product is the most robust. A little hapless plug, if I may, because I love it. It's easy to use. You guys are fantastic on the customer service end, and I would just suggest to anybody, if you're looking for a fantastic market profile trading tool, please check out WindoTrader. It is, in my estimation, one, if not the best product out there for utilizing that. So thanks for all the work you guys are doing and building. It's great. It's a great product. You're welcome. So real quickly today, we're going to talk a little bit about perfection and how it is, quite frankly, the elusive piece that every person I've ever known thinks they can master. And I guess after doing this for 20 plus, almost 25 years, I came to realize probably, hopefully earlier than most, and not too late, because continuing to be successful as a trader in this business, but perfection is not something that is attainable in life. So why should it be in your trading? And that's really the goal of this discussion, a real top-down view of why perfection should not be something that you're shooting for. So again, I think that from working with a number of traders over the course of the last 5 or 6 years, that perfection is again something that most people come in thinking they can attain, and I think it is very much a sickness and a virus, and I'm going to plan to walk you through how to get away from that sickness of seeking perfection. And if you will, our goal here and our payoff is to help you to attain the medicine that will allow you to run your trading as a business. And we say here at the Market Profile Trading Academy, trade less, earn more, and that's the TLEM that you see here. That is something that we really believe in. Trade less will help you to earn more. Who am I? My name is Matt Davio. Matt Davio. Davio is actually the correct pronunciation. Terry announced it correctly, but it's been bastardized. I grew up in Midwest, Detroit, Michigan. I've lived in Bend, Oregon for the past 13 years. I've been trading for nearly 25. I ran my own fund. It was a short biased equity option fund for about 4 years. I ran that 03 through 06. Marginal success. The big payday would have come obviously 08, 09, and we were not in business any longer. We got dribbled to death with the lack of volatility there, 03 through 06. That was one of those periods, much like we're in today. Matter of fact, 2010 through 2013 has been a similar low volatility environment. I worked for Peak 6 and with Parallax, both trading side pocket arrangements with both those funds. I've been involved with a few startups here in Bend, Oregon. I love the 4 seasons that Oregon offers. We have sun, yes, sun out here in Central Oregon. We're on the high desert. We're on the east side of the Cascades, which leads to 300 days of sun, and that's why I moved out here. 4 seasons, very mild, very temperate. A lot of golf, a lot of fishing, a lot of hiking, biking, skiing. Those are the things that we like to do as a family, along with all sports. I've got 4 kids aged 10 through 16, and I am the founder of Market Profile Trading Academy. So today, perfection again. How is this killing your trading? Let's start pretty simply with a couple foundational beliefs that I have. I am not a scalper. I don't believe in scalping. I just don't think it fits my personality. There are people that are successful with it. However, I think it takes a great deal of discipline to trade 100 times intraday and be able to protect yourself on the risk side becomes tiresome. And I think most people don't and can't scalp. So let's just set that premise from the beginning that I don't believe that scalping is a long-term strategy to success. Again, unless you're going to program a computer and tell it what to do and how to do it, and even that is fraught with all types of risk. So we're going to talk a little bit about understanding risk. Trading is not a perfect game. I don't believe, again, in picking tops and bottoms. I think it's difficult. You are going to have winning trades and you are going to have losing trades. You will never get to the point where you don't have losing trades. You will have to get used to, as we say in teaching our partners, you have to get used to taking some level of heat, having trades go against you. And on that same side, you have to get used to sitting in a trade, maybe that is going your way, but it hasn't achieved its time or profit element yet. So taking heat can be looked at on both levels, and that you really are going to be early and you're going to be late, and trading is really much like life. It's a living, breathing entity. In my view of the markets, it's run by people, so it has an inhale, exhale, and that is definition of trading to me. So I've got a chart here, which is a pretty recent chart. I actually took this picture yesterday using WindoTrader. And this is looking at about 2 months of trading. However, it's only going back about 6 weeks. The last couple don't show here on the left side, the last 2 weeks before that. But the profile is histogrammed here to the right. You've got a market profile, daily profiles, and overnight profiles shown on the last couple days, sessions. And really what I'm trying to show here is just real top down that where is the perfect entry on this chart? It depends on if you're long, depends on if you're short, depends on if you're making a spread trade. So it all depends on a lot of different things. And I guess the real reason to show this chart is there is no perfect top or bottom in a chart at any time, anywhere on any asset class. So you really have to get used to how then can you look at how can I then trade if Matt's telling me there is no perfect entry or exit. Whoops, excuse me. So the psychology, again, I think it starts from an early age, especially here in the United States. We teach our students, get 100% and you have a perfect grade. get an A plus, and you will be the valedictorian of your high school. Continue that, and you'll be the valedictorian of your college, and then you can go and get your your degree at Oxford after that. So it's all about being perfect from the way we are raised and raising our children. When in fact, I think as people, we learn as much from failing quickly as we do from, in theory, trying to be perfect. Because again, perfection is really an unattainable feat. So I think especially when you look at trading as a business, this is where people get hung up. They want to be able to categorize. They want to be able to put everything into nice, simple buckets. And if trading were that easy and that simple, there would be a lot more people doing this. I think trading is, people always ask me, do you teach your children about it? And I absolutely do if they show interest. But it is one of the most mentally draining, physically draining professions that I can imagine. I'm not a doctor. I've sold medical devices as a little bit of background. I've seen a lot of doctors, and having that type of focus, especially in microsurgery, is something that I would probably associate with scalping. I think perfection is not possible, whether you're a doctor, whether you're a plumber, whether you're a car mechanic, and whether you're a trader. So again, just setting kind of a premise that I think a lot of people come into this business and into this game thinking that, well, I'm a pretty smart person. I'm an engineer, I'm a doctor, I want to categorize, I want to bucketize everything, and I'll be successful just as I have been in my other lines of work in my life. But the reality is, most people aren't used to losing as much maybe as you will, and that's not a bad thing. It's just that most people don't understand the psychology and the gamesmanship that goes along with playing a game. And trading is in my opinion, one of the greatest games. I grew up playing backgammon with my father, gin rummy. These types of percentage games are better tools than really anything that you can learn from past experiences. You've got to be able to kind of have some tools and some gamesmanship to even step into this sport. And trading is very much a game, very much a sport. And you have to get good in your head in getting over both good trades and bad trades, and managing those losses, and how you win and how you lose is important. One of my favorite writers, and he's a trader, Nassim Taleb. He's a longtime trader. He traded with Soros. Traded kind of opposite way Victor Niederhofer did. Niederhofer tended to sell a lot of options, puts mostly, and every 10 years or so he blows out. Taleb, the way he traded was really very different than most people ever would want to, and he takes it to the extreme of trade less, earn more, in that he would go out and buy a lot of very cheap options, whether they were indices or individual stocks, and he'd buy cheap puts, cheap calls, and just basically say, I don't know when the market's going to move, but I do know that it's going to move, and when it moves, I'm going to capitalize on that. That is the way that he made his money. Believe it or not, he'd lose probably 90% of the time, and those 10% wins would not only pay for his 90% losers, but it would also give him profit. So there's a lot of ways to make money in the market. I'm kind of talking extremes, but I highly recommend you read Taleb's books. He's got a book on options theory, options pricing, that he wrote in the early to mid 90s, that I think is a fantastic read if you want to learn about options. But more importantly, read his non-trading books, which are Fooled by Randomness, The Black Swan, and most recently Anti-Fragility, Making Order Out of Chaos. Those books are really, they really drive home kind of the same common theme, which I do believe in, which is doing less and less intervening, whether you're a government, whether you're bureaucracy, whether you're a parent. All are kind of, letting things have their natural course are very important. So, and they also help you to deal with failing quickly. And that's something, again, as a trader, you'll hear a lot of people talk about. Cut your losses, let your winners run. Easier said than done. but kind of the same theory here. But I really recommend you read his book. So I've got a book plug here for Mr. Taleb. Getting over the hump. Again, finding your time frame, finding your comfort zone. Depends on how often you can be in front of the screen. I have, as a professional trader, I am in front of my screen if I want 10 hours a day, but I choose really to focus on longer term time frames, whether it's a day to 3 to 4 weeks. It's kind of my sweet spot. Find the area and the time frame that works best for you. Again, I'm not going to trade 100 times a day. It's just not going to be in my makeup to do this every day. Define your losses before you start trading. How much are you willing to risk of your trading capital? And again, trading capital is different than your overall capital. Your last $50,000 should not be the only money that you're trading with, or should not be the only money that you have behind you. So I always recommend people be well capitalized, understand what your risk is, how much you're willing to risk on every trade, and be good with it, because you're going to lose on trades. So if I know that I have $100,000 to trade with, and my maximum drawdown per trade idea is $2,000, then it becomes a much different game knowing that I've accepted that $2,000 loss. And when you have winners, you need to let them run and push those trades. And we'll talk about that a little bit. So, a couple tools that, again, I like to use when I'm using the WindoTrader platform is, again, we talked about this earlier in the charts previously. I've got a histogram here which shows the market profile strength. You can see this wide portion right here at 33.75. And this was taken yesterday by the fact, so this is real relevant if you want to go back and look at your charts. This is going back a full month of trading, and there's another month to the left here. If I had shown all that volume from the left side here, you would actually see a market profile to the bottom here, which shows a even larger area of control for all of you market profile technicians down below around 32.25. And we trade today right here around 33. I think we closed right around 33.70 plus or minus and the NQ. This is the NQ. And what I was looking at yesterday was we had a big area of congestion in a bracket, if you will, over the last 3 days after the Janet Yellen meetings. And I was looking for a break. Quite simply, this is a bracket. I was looking for a simple break after this amount of time, the 3 days spent here, and we ended up getting it. What happens is, and my target was right down here to that 33.75 area, which we proceeded to hit today, and we actually even traded today down here to this 33.58 area. And that's your next level of support. So trading is not all about getting every piece of every move, but if my initial target was 33.75 and I had sold 10 contracts, maybe I take off 5 here and look to pick up the other 5 once we get down into this 33.55 area, which again we still haven't hit, so maybe we're pressing the trade, letting it run a little bit and letting it go to that area. So being not perfect is a must in trading. This is really important, and this is where I think scalpers get caught up in, well, if I can just do 100 times at 100 points, I'll make 100, I'll make a total of 100 points. Well, why not try to take one trade and take a look, a bigger view of the market? Let's say your nominal range has been somewhere in the 1 to 1.5% on the NASDAQ, 30 to 45 points. My goal as a trader is to take out anywhere from a quarter to a half of each day and each week and each month and each year. So if we're 30 points wide today in the NASDAQ, as a matter of fact, we were about 40 points wide, 33.58 to 33.98. And 40 points is that total low to high range. A successful day for me would be 10 to 20 points. That's a great day if I'm day trading. And if I do that every day over the course of a week, and just say 30 points every day is our range. So if I end up taking 10 points, 15 points, 8 points, 12 points, and then lose 3 points At the end of the week, I've taken out a good 25 to 40% of the market's range. And that's really the way that I like to look at the market. It's not a linear business. It really depends on how wide the market is. And if you're not able to take wider ranging trades, you're going to end up just beating yourself up psychologically. In other words, you'll watch 3 scalps work out the way you wanted, another 3 you lose, and then you break your rules and because you're just thinking it's going to run more. The problem with scalping is you just won't get the long, big moves because you'll never be in them because you're only trying to get a half a point to a point, time and time again. And again, the jiggles are just too much for me to handle and maintain psychologically. And at many times, when the right trade comes along, you're going to not be there to press when you need to press. So, the trend is obviously important. Are you trading the trend? Are you trading counter trend? Those are key things when you're looking at the markets. So let's take a look. Lots of entries and losses. Winners are small, right? And this is a Scalpers World. I'm tired of just looking at this chart, so let's take a look at this chart. This is a perfect example. Yesterday we were just back and forth, tightening, and the profile was just strengthening, or rather it was looking like it didn't want to go anywhere. And so why try to guess until it breaks out of this range? And you could set a sell, so you had one here on the green line, and you could even press another one when it got below the value area from the day yesterday. And that worked out very nicely. And again, it came right down into that high 70s area. So instead of trying to get every little nook and cranny out of these little moves in here, which really, when you look at this range here, 34.18 down to 34, let's call it 07, this is about a total 12-point range. And then, so this was 12, this was 8, this was 4, this was 3, this was 2, this was 1, this was another 2, and then it finally broke. If you were trying to get every little wiggle in there using some type of tick chart or time frame chart, you're just going to get your hand chopped to death. You're going to win one, lose one, win 2. So why not just sit back and wait for the bigger move to come via the profile and how it's set up? And that works out very nicely over time. So pick your spots. Even the best traders I know on the scalping level they just don't have the stamina to handle that type of movement. So pick your areas. Don't be a hyper scalper. Define your loss right up front. Develop a plan. Stick with it. And again, if you define your risk and your setups right from the get-go, you will be successful at this. So always remember, trade less, earn more. This is here's where people struggle. They struggle with the patience to do this. But if you can be patient and wait for the right setups, like in any business, 20% of the time is where you're going to make 80% of the money. And it doesn't matter whether you're, again, a plumber with a couple big customers and the rest are just kind of out there, or you're a trader. You have to wait for the market to come to you. You are a professional stalker. And I say that in all seriousness and jestness, that our job as professional traders is not to trade necessarily all the time, but to find the areas where we know what we will do when price gets there. And the market profile is a tool, and the WindoTrader product is a tool to help you as a trader define those areas of risk, support, resistance, where the strong hands are, where the weak hands are, and that's where you need to focus. So how can we help you? Well, I can tell you that Terry and his team at WindoTrader have really helped me to simplify my business. I used to use 3 or 4 different platforms and toggle between this platform, that chart. And when Terry and I started talking, he just basically said, listen, I can do all of that, I think. What do you need? And they have been very responsive. And I want to say, again, hat tip to you guys, to Eric and to Terry for the work that you do. You make my world much simpler. So we offer a Twitter feed where we call maybe 1 to 3 trade ideas in a day. They could be intraday or interday swing trades. We're very patient. We're looking, again, to capture the largest part of a day if we are day trading. And if we're swing trading, which in this market, I can tell you right now, Terry, it's not a market that I'm doing a ton of swing trading because since October 10th, when we broke down, we've been back up into this area, and we've been really in this 3360 to 3400 now for 6 weeks. So I'm not going to press until that range is kind of figured out again. And we haven't spent more than a day or two outside of either side of that range. So that's the deal. So ask questions. If you have any questions, you can reach us here at memberservices@mistrade.info. You can find our results at mistrade.info. Again, we've got a Twitter feed for simple ideas every day. And then we also offer mentorships, one-on-one or group partners on that level. And then we also do some group seminars at certain times of the year, 3 or 4 times of the year right now. So that's where you can find us. Again, everything's right there. And Terry, again, I appreciate you allowing us to come on. And we're going to be doing a reciprocal webinar with Terry on our feed in early December, where Terry and Eric are going to come on and show some features of the software and how they've developed that. And I think that'll be great for people to see also. So expect to see that and get some more detail. And Terry, we've talked about this, putting some of my templates on your website as you do with other traders. And again, I'm happy to share what I use as far as the tools and the templates for our partners on Terry's website. Okay, great. That's a great question, and I do trade multiple markets. I tend to focus on 3 to 5 at most. And again, I come from a past history of trading, looking at hundreds of charts for stocks, and I do less and less stocks just for right now, tax reasons. I trade futures for liquidity and transparency primarily, and I focus primarily on one financial, whether it's NASDAQ, ES, YM, or TF. They all kind of are, pick whichever one works for you. I always tell people I trade the NASDAQ right now because nominally it's wider than the rest. I trade oil. I trade natural gas. I also trade gold occasionally, although I haven't been lately. And I've traded a lot of grains as far as beans, primarily over wheat and corn, but I trade all of those. So yes, I do trade multiple markets. I look at all the futures markets. I even trade some, currencies, mostly the euro if I'm going to trade. But I'm not, doing a ton of trades a day. Matter of fact, today we did, one core trade, and that's kind of the way that I look at markets. I tend to pick my spots. I tend to stalk the market. I'm very diligent in my imperfection, and I'm very imperfect. I have winners, I have losers, and I kind of leave it at that. I do. I trade 10-year, 2-year, 5-year. Absolutely. I do use market profile for all asset classes. Matter of fact, Terry, I was going to ask you, is there any way you can get me a market profile on Bitcoin? Eric, I'd love to see Bitcoin, because there are charts out there. So I would love to see it. I mean, yeah, so there was a great trade there. There was a great pullback trade there yesterday when the Bitcoin broke from. Matter of fact, let me see if I can bring this up for you guys. So we were suggesting on that bounce when it went from 900 down to 450 or 550. We were looking for that bounce to that 700 area, and again, I would have loved to have seen the chart there on the market profile, but I don't have a market profile chart, and I'm not even having luck. But this pulled back here, went from 900 to this day right here, and we were trying to sell in that 700 area, which it hit right on the right on the button yesterday. Got up to about 750, and that traded back to 450 again today. By the way, so that's the kind of volatility I love as a trader, and we're not seeing a lot of that in the futures right now. So if you could get me Bitcoin in half seriousness, I'd love to see that on a market profile. But yes, I do use market profile when it comes to stocks. Tesla has been a stock that I will trade, and mostly when I trade stocks, I usually use options, and I'm usually longer term, 3 to 6 months out. Yes. I don't use hard time on any of my trades. Matter of fact, I wanted to be short this market into the close today, but I didn't get the price I wanted. I was looking for that 71 to 75 area. So I'll offer again overnight. Matter of fact, if we're able to bounce a little bit more into this, into this meat of this value here, I'd look to add to a short after this bounce off that move to the reactive bottom there. So I think that this market right now looks a little bit lower, but again, I'm looking for a close under this level, somewhere below 33.50. To answer your question, it really depends on what I'm trading and how I'm trading. But I don't use, just because we're coming to the end of the day, does not mean it does. That does not force me to exit a trade ever. Never will. So I'm not a hard and fast day trader. I never have been. Don't believe in it. Yeah, that's a tricky one, and let me not. I'm not trying to skirt the question, but let me show you how I would look at it in the Nasdaq. And Terry, you and Eric have helped me with this, and this is the way that I like to look at the Nasdaq. What I have here is I have the red and the purple sessions are the day sessions, and then the blue and the green color are the overnight sessions. So from 1:15 or 1:30 Pacific time until 6:30, that's last night's overnight. Same thing from 2 nights ago, same thing from a week ago. And then the red you see here is the day session. So I like to look at it this way. I like to look at each day broken out, but then on my right, on my histogram, I can set the time frame of how far back do I want to look at this overall market profile, if you will, via the histogram. So I've got my own intraday profile here, I've got one here, I've got one here, but I also have the overnight sessions broken out. So that's the way that I like to look at that. And I would do the same with the euro. With the euro, I would probably, the way I've typically done it, however, it's changing right now because it's become more of a, honestly, I look at the euro more 24/7. And really probably the most important, the way that trades is still the European session. So for me, it's midnight until about 6 in the morning. But I don't really break them out. I tend to run the euro 24-hour sessions and just have one block composite. But you need to be aware that the European session for me is midnight. The Asian session is here in an hour at 3, and then the U.S. opens at 6:30. So that's the way that I tend to look at all the markets based upon when the market, the European and the Asian markets really open. That's where I tend to put. If I want to break out the day, that's how I would break out the euro. But again, over the last couple of years, I've kind of moved to a more just 24-hour period in the euro specifically. So again, everything there's nuance and context within everything, and I think all these things have an evolution. Things work for periods of time. It could be years, months, depending on what type of market we're in, and then they change again. So you have to be flexible in your thinking as a trader. Nothing lasts forever. And again, beans is a perfect example where beans used to just 3 months ago, we're opening at 7:30 here on the West Coast, and now they're back to opening at 6:30. So that changes everything. That's kind of pulled me back from even looking at beans. That and the fact that the nominal, daily rate has kind of been squelched and gone back to, nothing. So it really depends. You really have to be open-minded and flexible. Yep. No. Sure. That'd be great. That'd be great. Okay. I can see it. Mm-hmm. Gotcha. So that's all three. This is all three over here on the right, then, or on the left. The balance. Yep. Got got it. Right. 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 Sure. Yeah, it is. But this is what's great about your platform, Terry, is that he wants it to look this way. When he dreams markets, as all of us strange traders do, and we do. I visualize things the way that you've set up on mine, and this is what's great about it. This is the way that he dreams about, okay, now I know when it looks like this is where I'm going to behave. So it's fantastic. Flip back to mine real quick. Let me show you something, because it just prompted me. Okay, yeah. Hang on one second. Let me get that back. So let me show you. Like here was a similar thing today, and just kind of I'm gonna scroll into today's action. And what was interesting, it was very frustrating again most of the day until the end of the day, past the Fed minutes. But what you helped me build, Terry and Eric, was kind of the same thing. I want to see. I'm looking at the same thing three ways. And this is what I talked about earlier, where I've got a composite, I've got a broken out, expanded, and I can expand this, as you know, Terry, and I've got the candle charts, and then I've got a composite over any time frame that I can designate over here to the right. But the reason I wanted to point this out is, yep, and then I've got the overnight, which is this green, exactly, and I can show this. I've got it compiled right now. I can go in here and I can do these different things. I can look at it expanded, so I can look at it just like this. And again, it shows me the value area based on my parameters, and you can change those, totally customizable. But again, I can see very easily when I see something like this, okay, this is where we opened. We had this little bump right into the open. And, what we had this, on the opening drive is we had this push down. But here's what I wanted to kind of show, because this is a perfect to show this. We came back down here. We didn't even get down. I would have loved to have bought this morning, but I was looking more, again, my perfect setup this morning would have been buying 75 to 65, and we got as low as 79 and 79.25. But here's what I wanted. That's what prompted me to think about this. Not only did it not get to the area where I wanted to buy, but it flipped on a dime here, Terry. 71 contracts. It was all that traded. And I love seeing this. Like the chart that you just showed me how much, he had his own little stars based on size of orders. Well, this shows me exactly how much transacted at every price on the profile. I love this. This shows me in a color, in a visual way, where the strong hands are, and in a number way. You can see the reds are the heaviest areas, right? This is where the big volumes, this is where heavy hands were transacting. And it shows me false lows like we had here. When this comes back to test again like we did on huge volume, well, guess what? This is one of the easiest trades of the day. When this breaks, it's going to go down fast, and it went from 79 all the way down to 59. That is a home run trade. That's a 20-point trade, which, guess what, is half, going back to what we talked about, the day's total range. Total range here, 98 to 58, 40 points. You got 20 in about 22 minutes. You can't ask for a better setup than what you saw today. And that, to me, was set up based upon doing my homework. First of all, we couldn't come back into here. Okay, so there was people front running that area, which, again, is kind of what you're seeing in a market like this. It's a scared market, so everybody's trying to get out ahead of it. So people were buying it, but not a lot of people transacted from 83 down to 79 and a quarter. There's not much volume in here at all. So it rallied. It rallied on bad housing numbers and the ECB coming out saying we're going to go to negative interest rates. So it went from there to here in a heartbeat. And then that was it. Everybody distributed up here. Again, huge volume, biggest volume of the day at that point. Happened pretty much right up in here. But it never could see that. It never saw that number the rest of the day. It never even tested it. So very difficult to catch tops and bottoms. Very difficult to catch, just let me finish, to catch a bottom here or catch a top here. Very few transacted at either of those prices. But guess what? You might have been able to get some in here, and you might have been able to get some in here, but that's not a very wide range. So I chose not to play because neither of these ranges were new to me. Right. Correct. Yep. Well, and here you see, I mean, if I'm understanding what you said, which I think I am, it's a perfect example. Huge volume up in here, right? Huge, right there. And that 94 to 97. And then we ran up there and then we sold off as quickly as we had come up, but we didn't break that low. Yet, then when we did rally, guess what? We came right back into this and we couldn't get to it. So those strong hands, as you said, confirmed right here another sign in the nuance, another sign in the context that if this thing breaks later in the day, all these people that were long and chasing, they're screwed. And to me, the game's all about who can get hurt the most. And reversals are some of the best trades in the, you don't get them every day, but when you get a reversal like this, where you had a fake high, because that wasn't a new high, a fake high, and then, when this broke late in the day, and again, it was all Fed minutes related, but if you had sell stops in, as you should have, boom. it's going to go right down. And you've got a backstop all the way up to here. And to me, I'd have no problem selling, even from 80 up to 95. So to me, that was my game plan. If I can sell 80 all the way up to 95 late in the day, and we hold below 3,400, great. I'm just going to get shorter into that range. And again, that's where the imperfection. You have to be comfortable as a non-scalper. 15 points is less than 0.5% nominally. That's no big deal. I can position my way into that easily, and so that's part of my. That is my MO. That's how I trade. I don't look for exact spots. I look for areas to enter and exit. And on the flips, sure, go ahead. So when I have partners come work with me, either here in Bend or online. One of the things I talk about in writing a market narrative is other factors. And other factors for me are both technical and fundamental. So I want to know where moving averages are on the technical side. I want to know where, those types of traders. I want to know Fibonacci numbers because I know people trade off of them. And the same side, I want to know fundamentals. Most importantly, to me, I want to know when the jobs number is, first Friday usually. I want to know when the oil number is every Wednesday. I want to know when the grain reports are. I have those on my calendar. So those are the FOMC dates. To me, are kind of non-tradable. That means the days that they're announcing rate announcements. I want to know when the minutes are, like they had today. So when these areas break, I'm going to have a great opportunity to surf. But I typically, fundamentally, that's about all I care about. I don't get into coffee production or cocoa production in West Africa. The market profile tells me where the market is at any one point, and that's really all I need to know. That's the most important thing. Where are we right now, and what are my decisions based on where we could go? That's all I can. That is in essence all I can affect as a trader. So if I know that I want to sell up to 3,400 from 3,480 or 3,380, then that's my plan. Then I'm stopping somewhere over there. It's as simple as that. I think people like to complicate it. The fundamentals, again, I'm not going to compete with the big trading desks. They have staff of people that they may be able to garnish out an edge. I have no edge. I have no beaks. I have no orange juice report that I'm going to get ahead of anybody else. So why even bother? So I use the market profile to give me areas of interest, where I would like to play ball, where I want to take my mitt and go and play. And if it's a market I don't like, I have that opportunity to not play. And that's very important in this game. You have to be able to take your ball and your bat and go home and not play. Okay. Thank you, Terry. It was great. I appreciate it. Thank you. You too.